please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, so we are basically at the high point, almost at the high point of the day. The Bank Nifty and the Nifty, that is 10,789 on the Nifty, 26,636 on the Bank Nifty. Mitesh Thakkar is with us for some trades and thoughts on the market. Mitesh, thanks very much. We've picked up from the day's low. Do you think the recovery continues, and where are important levels at?
Often, Prashant, I think, see, while we have done very well from the day's low, I think it's still a market which is ranging. We haven't seen any decisive signal of a breakout beyond 10,800, 38.50, while similarly on the downside, 10,720, 700 remains a good support zone. So I think that range might continue. I think there's a mild chance of an upward breakout, but I think the indicators are yet to get into a firm directional move on the upside. So till that happens, I think the flatness of the indicator suggests that we might be ranged, and this movement could last possibly till another few days. Though expiry tomorrow could be interesting and might give a signal.
Expiry is day after, I think, Thursday on Tuesday, Mitesh.
Sorry.
Okay, but stocks?
Yeah. I have two buy calls, both from the FMCG side. I think Marico has completed a good pullback. That's a buy with a stop at 330. Look for 350 as the first target. It's moved up slightly, tried to buy it around 336 zones. And Godrej Consumer has just broken out to a fresh swing high. That's a buy with a stop below 1170 for targets of 1240.
Okay, well, let's get some Twitter queries answered, Mitesh. First one is Shivang holds 200 shares of AB Capital at 220, 200 shares of Max Financial at 580 with a 5-year view. So long-term shareholder. Should he average the stock or sell?
One thing I think, giving a 5-year view on charting is slightly difficult because charts keep on changing during that time. But for the timing, what I can see on the chart of AB Capital is that it's an exit. I think it's clearly making lower lows, lower highs ever since the stock has been listed, and I don't see a signal of a reversal as yet. So maybe shifting on to some pharma stock which are now getting into longer term uptrend, or a Reliance might be much more beneficial idea. So in that sense, AB Capital is an exit. MFSL, it's a good chart. I think it's a hold. It's now very close to medium to longer term support zones of 425 to 410. He can even look at adding more around those levels and keep a stop below 390. I think it might consolidate for next few months, but I think eventually it will resume its uptrend and head towards targets of 650 plus in the next 2 to 2.5 years.
Okay. All right, Mitesh, we're going to leave it on that note. Thanks very much for joining in and talking to us. Well, there's some weakness coming in on Cipla as well. So that stock is down around 1.5%. Watch out for that one. In fact, it's also Lupin and Sun Pharma. So all of these pharmaceutical stocks which have seen a strong run up are now coming into the red at this point in time. Reliance Industries as well, just about below 1,000 rupees as we speak. Take a break. But up next, we're going to focus on some more stocks as well as opinions. Stay tuned.
Okay, welcome back. So we've got markets which are at the high point, almost at the high point of the day. I mean, the intraday would tell you that. Some buzzing stocks coming up at the bottom of the screen. We've got Shree Cements, which is up about 4% or so. We had an extensive discussion on the cement sector earlier on Bazaar today. Marico is the other one, 2.5% higher coming in there. Pramod Gubbi is Managing Director and Head of Equities at Ambit Capital. And he's joining us from London to discuss fundamentals of the market. They're having their Ambit India Access Conference in London. Pramod, thank you very much for your time. Great to have you here. I mean, I think the basic question to begin with, which is on everyone's minds, is whether the market is vulnerable for more correction, more drawdowns broadly at an aggregate level. Will it happen quickly, or is it going to be essentially a spread out affair running through the course of this year?
No, I think there's certainly scope for more. There are significant sources of volatility that could continue through this year, making further possibilities of a further drawdown, starting with global factors in the form of continued tightening of liquidity by the Fed as the QE sort of rolls off, hitting almost a $50 billion run rate by October, and the ECB in its latest meeting has also hinted at sort of the end of QE there. So with global liquidity tightening, US Treasury yields close to 3%, there is clearly a risk to emerging market assets, as we've seen in terms of outflows, that those outflows can continue causing further weakness. And on top of it, I guess local factors as well. With while the economy is picking up clearly on the growth path, there's certain concerns emerging around inflation, current account deficit, and potentially the fiscal deficit also slipping in the election year. So given these concerns on the macroeconomic variable, there could be sort of a knock-on effect on the currency as well, which could cause further outflows from foreigners. Having said that, I think domestic inflows continue to be quite strong, which could cushion any sort of catastrophic fall to the further downside. So I guess if you ask me, possibilities of a drawdown from here are certainly real.
I mean, so when you say drawdown up to, just to put some numbers broadly, up to 5%, could be more than that, under 10%, where do you stand on that?
Yeah, I mean, I wouldn't rule out a 5 to 10%, even a 10% fall. I mean, it depends, like we've seen, because the market level at the in Nifty or the Sensex level, the fall hasn't been that clear. But at the underlying mid-cap level, several individual stocks have been knocked more than 30–40%. So that is not clearly visible. So I think it's not just simply about the index, but at the broader market level, you could see further correction.
Okay. Pramod, would you agree with the assessment that, say, India is doing better vis-a-vis its other emerging markets?
Yeah, certainly. At least at the the Nifty and the Sensex level, we were clearly outperformed. But like I said, the broader market, the correction has been far steeper. Having said that, I think given the effect of liquidity and hence the effect on the currency, we relatively stand out, certainly better than some of our other emerging market peers, because most of them are open on the capital account, and the sort of hit that they take because of capital outflows is much greater than what India is. And to that extent, will continue to be seen in more favorable light on a relative basis compared to other emerging market peers.
Okay. Pramod, when do you think flows will start to come back into emerging markets, given that we're probably just at the beginning of a tightening cycle?
No, it's just the beginning of the cycle. It all depends on what call the Fed takes. There have been calls for the Fed to sort of reverse some of the roll-off program, including our own RBI governor is clearly vocally made that plea. But I'm not sure whether the Fed will take the effect of emerging markets into consideration while they'll take that decision. So if that tightening, remember we're still ramping up that roll-off and going up to 50 billion by October, and that'll be revisited sometime later this year. So at least until that point in time, I don't see these flows reversing. So all eyes on the global central banks to see if they accommodate a less stringent view of the roll-off process.
Pramod, at Ambit, where do you see maximum opportunities for absolute gains right now across the screen, across markets?
I think the going into the election year, consumption should certainly be of interest, given this sort of spending by the government on the development program as well as general election-related spending. We'll have hopefully a normal monsoon, which should also mean rural is coming back after a tough 2–3 years. Wage growth also seems to be picking up, so consumption should definitely be one of the interesting themes. Also private sector financials, I think the sort of space that public sector banks have given away, given the lack of capitalization. Private sector banks continue to gain market share. On top of that, in a rising rate regime, some of these banks with very strong CASA can expect increasing spreads and margins, which should drive earnings growth disproportionately larger than the top line growth. So it's a double double catalyst for private sector financials in general. And also, I think if you're looking at a scenario where the currency were to continue to depreciate from here, IT should certainly be in the reckoning, not just because of the currency, but also I think there is pickup in global IT demand, and also the sort of initiatives taken by the Indian IT companies in terms of building capabilities in the new areas of big data, analytics, and so on. They should start, reflecting that in some of their, top line numbers. So between consumer, private sector financials, and IT is where we reckon most of the interest should be.
Okay, Pramod, just a quick last question then. It seems as though investors are crowding into private sector financials as well as consumption stocks, and this is despite very high valuations already. What is that a result of? Expectation of, say, growth rates being too high, or uncertainty being too high in other sectors?
I think a combination of both. Like I mentioned, because of the factors, the growth runways for some of these companies are quite long. You can see as a combination of formalization and financialization of the economy, both these two sectors can expect their high growth to sustain for much long periods of time. Having said that, if you look at on a multiples basis, you won't be able to factor the longevity of that growth. But having said that, I agree, valuations don't leave too much margin of safety. If things were to change on a structural basis, then there could be a downside on the valuation side. But given the current scenario, there is visibility of growth. But I agree, there's also the other component of the fact that there's no investment cycle, at least in a meaningful way, where other sectors of the economy can lend itself for being attractive investment ideas. So there is an element of crowding in which is pushing up those valuations.
Okay, all right, Pramod, we're going to leave it on that note. Thanks very much for joining in and talking to us. Well, let's quickly get you a heads up in terms of what's happening with the markets at this point in time. For the Nifty, it's up around 0.2% as we speak, and for the Bank Nifty, absolutely flattened out. So just about consolidating at this point for the Nifty. And if you're talking about specific stocks, it definitely has to be Tata Motors, which is down 2%, Cipla, which is down around 1.6%, Bajaj Finance, which was really one of the top stars in yesterday's trade, and we saw that kind of buying coming in, and record levels for that stock is seeing a little bit of profit taking at this point, so down around 0.8%. Similar concern coming in for something like a Bajaj Finserv as well. But maybe we can shift focus now. In fact, we do have a new IPO coming through. An auto component manufacturer, Varroc Engineering, is preparing for its Dalal Street debut, and it's around a 1955 crore IPO. It opens today. To discuss more about this, we have Tarang Jain, the MD of the company, who joins in our studio. Tarang, hi, thanks very much for joining in. So I was looking at your IPO. It's primarily an OFS, so all of the money is not going to be directed towards the company. Can you just brief us in terms of the IPO details as well as what the company is about?
Yeah, so you're right, we're diluting about 15% as a company, and 13.7% is held by Tata Opportunities Fund, and 1.3% is secondary dilution on the promoter side, which is myself. So I think this is largely, I need to give an exit to the PE investor. We're not getting any primary thing done at the moment, because we don't really need the funds, for our future growth, because I think we're able to do it through internal generation. And a net debt to equity at the moment, March 18, was 0.3:1. So we don't really need the funds inside. Coming to the business, we largely play in two major businesses. One is the original, India business, which is largely more the 2- and 3-wheeler parts play. We do about 16 products, across 3 divisions in India. Something we started in 1990 with Bajaj Auto. Today we kind of supply to, possibly most of the 2-wheeler OEMs here. This is about 35% of our revenues. So this is our original core business. Okay. And the larger business now, which is the second core business, as we call it, is something which we bought in 2012 July. We bought it from Visteon. We bought their exterior lighting for cars division. And that's become now, the major division. That's about 60% of our revenues, and about 35% in India, out of which the core business is a 2- and 3-wheeler parts business, which is 90% of the total.
Okay.
So the India business is about 35%. Right? That is mostly 2-wheelers and 3-wheelers.
Yeah.
And the global lighting business is about 65.
Yeah, 61%, which is mostly lighting for passenger cars. And that's where we have, we're number 6 globally in the lighting business there. We have a 4% market share of the global lighting market.
And you make the whole, the exterior lighting set?
Oh, yeah. We make the whole assembly. So we kind of design the lamps and we manufacture and sell the lamps.
I mean, I was reading
to various OEMs.
Actually, even in India, you're the second, on consolidated revenues, you're the second largest Indian auto components manufacturer. By consolidated revenue.
That's true. Yeah, I know. We've been not many people know that. But that's the reason. The reason is because, we have a global play in the exterior lighting business.
Right.
That's about 7,000 crores in revenue. Still quite small compared to, some of our competitors who are bigger than us. Because let's say we are number 6. The number 5 player is double our size. So still a smaller scale, but then, from an Indian auto component player point of view, we're still very large.
And the global lighting business, is most of this manufactured outside India, in plants outside India?
Yeah, so we have various plants. And, like in this business, OEMs they have global manufacturing footprints, the global platforms, so it's very important, that you are there in all the regions of the world to support them. And today we have, plants like Mexico services North America. We have 2 Czech plants. We service Europe at the moment, China, India. We're putting a plant in Morocco, we will service southern Morocco, of course, northern African market, but mainly southern Europe. Brazil is for South America. So these regional footprints help you, kind of grow in a more effective manner by supporting your customers on the global platforms.
And North America would be how much of your revenues?
So of the total, last year we did about a revenue of about 11,000 crores, and North America would be 22%.
Okay.
The reason I asked is, I mean, you said the Mexican plant supplies into the US, right?
Yeah.
I mean, the obvious question is this entire trade thing, and Mr. Trump has got a thing for Mexico and stuff coming into the US from Mexico.
True.
Has it impacted anything happened?
Not so far, but in fact, we had made a plan B. When Mr. Trump came in, we had made a plan B because there was a lot of noise about the, about the wall and everything with Mexico. So yes, I mean, if something like that were to happen, we have a plan B where we can put in a facility, a rented facility.
In the US?
In the US.
Okay.
Because I think about 70 to 80% revenues are for the US market out of Mexico.
Right.
Tarang, you're hitting the market at a time where all of your peers, like the Motherson Sumis of the world, are actually at a fresh 52-week low, and they've been hitting 52-week lows. There's obviously concern about what's happening in the auto component market globally with, the JLRs and Volkswagens and the BMWs being your primary clients. What is your outlook at this point in time? I mean, you did around a single-digit growth in FY18 versus mid-teens earlier. Are you facing a slowdown in the global markets?
See, not really, because, what is happening is that, let's talk about the product, this product, the exterior lighting product, so let's say the global markets are not growing more than 2% year on year. But, what is happening is there is quite a fast penetration of LEDs into lamps. So let's say the car market grows at 2% globally. The lighting market grows at about 4.3, 4.5%. But because of the LED penetration, the growth is in double digits, So also if the markets were not to grow so heavily on the passenger car side, let's say it doesn't grow in the advanced markets of North America, Europe, for example, I think the content growth, is something which will drive, revenues, for us going forward. And when it comes to a lighting business, see, this lighting technology is something which is within just 7 or 8 players in the world. The global level of technology. It's not only about just making LED lamps. There are a lot of more advanced technologies, like matrix LED headlamps. Matrix LED headlamps.
So what does that mean for you in terms of, say, growth?
So it means that irrespective of market growth, of course, we would like the market to grow, more, but I think that we being in the right product segment, we are going to grow anyway more effectively. Our revenues will grow because of the electronics content growth in lamps. There's more electronics now in lamps than plastics.
So FY18, can you just break up what the 2 markets did, developed as well as India?
So India did about, I even take the 50% of our China share here. So India did we did close to about 11,000 crores in revenues in FY18, and about 3,550 crores was India. And about 7,000 crores we did out of our global lighting business for cars. And then we have 2, businesses which are others, which is like, one is the core business, two-wheeler lighting. which does, which kind of services the European market and also a market in Vietnam at the moment. And then we have one original acquisition we did in 2007. It's the company called MS, where we do large critical forgings for Caterpillar.
I've got numbers here. You said 11,000 because but the numbers here suggest the revenue from operations for 9 months ended 31st December 2017 was about 7,400 crores. That is the total revenue from operations.
So that was 9 months, but we had in RHP, we had kind of printed the whole year numbers, and what gets reported as per the new accounting system is 10,300 crores
for 18 FY18.
For FY18, and then I was also including the China JV. We have a 50-50 JV in China for lighting.
And what were profits? 18.
So overall, I think the profits were about I think around 9.5% EBITDA.
EBITDA margin was 9.5.
EBITDA margin was 9.5, a PAT of about 4.1, 4.2%, and an ROC overall of about 18.
Okay, all right, Tarang. Well, we've completely run out of time, but thank you very much for joining in and speaking with us. So that is Varroc Engineering. IPO opens today. We need to take a break now. More on the markets once we're back. Stay tuned. Welcome back. Well, for the mid-cap index, just about flattened out along with the bank Nifty as well. The Nifty consolidating, moving closer towards, say, 10,790 odd. Let's see whether we make it to 10,800. Advanced decline ratio also sluggish. If you want to talk about specific stocks, Info Edge is one of the top gainers from the mid-cap index. It's off the day's high, but nonetheless, that stock is still up around 5 odd %. And PC Jewelers, that stock gaining around 6 odd % at this point. So do keep your eye out on that. But with that, it's also a wrap on Trading Hours. Stay tuned. Halftime report just after a short break.